If you have an IRS audit, here's some common questions that we've received from our clients. If you have an IRS audit and you receive an IRS audit letter and the letter is identifying various expenses that the IRS is initially going to examine, do you have to provide them with all the records? Well, you should provide them with the records substantiating not only income, but let's focus on the expenses. If you have mileage expense and travel expense and you have cost of goods sold, which is generally inventory if you're selling goods. I've seen some other companies that have cost of goods sold that are service-based. That could also be okay if you're splitting wages into cost of goods sold versus administrative. But long story short, you're going to need to provide records. And if you don't provide records, if you ignore the IRS, what's likely to happen, IRS will disallow all of your expenses. So what you're going to be left with is the income and a much larger tax bill. Now, IRS can also increase the amount of income you report on your income tax return if they find additional income. They could contact your bank and get your bank statements, and they might find some more deposits than what you reported on your income tax return. Those deposits will become or treated as taxable income. And your job is now to come back and show why that's not taxable if there's certain large deposits that are not taxable income. But most important, expenses, you're going to have to provide substantiation for each item, especially the larger items. You might be able to negotiate with IRS and say, hey, look, you know what? Let's focus on the larger items, the things worth over a certain dollar amount, and that might build some credibility and trust with the IRS revenue agent. And they might not require other items to be substantiated as well. They might, spot check certain items. But you're going to have to prepare some documents that are from third parties, not things that you create. It could be your accounting system records, your profit and loss statement and general ledger, but you're going to need to support those because those entries were manually put in by somebody in your company. But you're going to have third-party records such as invoices and maybe some check payments from you, and also to show that these are business expenses and not personal expenses. I'm John Milikowsky, founder of Milikowsky Tax Law. Hope this information was useful.